by the time you make it through this entire video, you're going to have a clear-cut, simplified path to starting your trading career properly. Okay, so let's first start and set the foundation by understanding how trading works and how we should be looking at the market. Okay, there's a lot of technical elements that can be really confusing, and if you learn bits and pieces of it, it can throw you off the rails. This is a very simple way to understand how the market works and how the mechanics of it work. So over here, I have a chart open, but right now we're not going to worry about anything other than how and why the market is moving. Okay, so whenever we're looking at a chart, which in this case is this blue line, we're looking at increases and decreases. So all the chart is showing us is a visual representation of mass human psychology, meaning that there are buyers and there are sellers. Now, this is done with algorithms, this is done by physical trading, this is done in all sorts of different ways. So it's not as simple as people just clicking buy and sell, right? But the general premise is the market is adjusting to fill imbalances which are caused by supply and demand. So how this works is like this. Let's take right here, for example. In this part of the chart, when price is moving up, that means that there is demand from buyers and supply from sellers. If the demand outweighs the supply, the market is going to move up until there's another point where supply starts to outweigh the demand, and the market will correct until once again there's more demand than supply, and that will sort of bounce back and forth, which is going to produce something called volatility. Now, volatility is basically anytime there are drastic big moves in the market. And these are going to open up trading opportunities for us later. So simply put, as traders, our job is to find areas of the market where we can enter at a certain price, have the price increase to another price, then however many of these we bought times the increase is going to give us our profit. So if we bought 100 of these units at $200 and it increases to 205, that's $5 in profit per 100, which is going to give us $500 in profit. But let's take another layer deeper to start understanding where these intraday opportunities come from.